What happens when a hurricane strikes and the safety net you believed in is no longer there? What if, after the winds die down and the water recedes, you discover your insurance company has vanished, leaving you with nothing but rubble and bills? And what if this isn't a rare accident, but the new reality for millions of Floridians, living under skies that promise storms each year? Florida has long been the epicenter of America's hurricane story. With its long coastlines, low elevation, and booming population, it stands directly in the path of some of the world's most destructive storms. Every summer and fall, Floridians brace for the season, tracking storms across the Atlantic and calculating whether to evacuate, to board up, or to ride it out. But in 2025, a new storm is threatening the state, one not made of wind or water, but of economics and policy. The homeowners insurance system in Florida is collapsing, leaving many families uninsured, underinsured, or unable to afford coverage at all. The question is simple yet devastating. Why is insurance disappearing in a place that needs it most? The roots of this crisis lie in the unique vulnerability of Florida itself. No other state faces such frequent and intense hurricane impacts. From Andrew in 1992 to Irma in 2017, Michael in 2018, Ian in 2022, and Idalia in 2023, the state has endured a relentless series of billion-dollar storms. Each time, insurers paid out staggering sums in claims. For global insurance companies, Florida became not just risky, but unprofitable. As claims mounted, many pulled out entirely, unwilling to underwrite homes in a state where hurricanes are not occasional disasters but predictable, annual events. For the insurers who remain, survival has meant raising premiums. In Florida today, the average annual homeowners lease insurance premium exceeds $6,000, nearly 4 times the national average. In some coastal counties, it's even higher. For middle-class families, this cost is crushing. For retirees living on fixed incomes, it's unbearable. Many homeowners are forced to make a dangerous choice: pay exorbitant premiums, drop coverage altogether, or rely on Citizens Property Insurance, the state-run insurer of last resort. Citizens has ballooned in size, covering more than 1 million policies, but it too is vulnerable. A single catastrophic storm could drain its reserves, forcing special assessments on all Florida residents to cover the gap. The crisis is not caused by hurricanes alone. Florida's insurance market has also been plagued by litigation and fraud. The state has long been a hotbed of lawsuits over claims, particularly related to roof repairs. Contractors, lawyers, and homeowners sometimes conspire to inflate damages, file lawsuits, and pressure insurers into costly settlements. Even legitimate claims can spiral into prolonged court battles. Insurers argue that this litigation culture drives costs even higher, making Florida uniquely difficult to operate in compared to other hurricane-prone states. Climate change adds another layer of urgency. Scientists warn that hurricanes are becoming more intense, fueled by warmer ocean waters. While the total number of storms may not be increasing dramatically, the proportion of Category 4 and 5 storms has risen. These storms bring catastrophic winds and surges that can wipe entire communities off the map. For insurers, this means the risk curve is steepening. One storm can generate tens of billions of dollars in claims, enough to bankrupt smaller companies and rattle global reinsurance markets. Florida is no longer just risky, it is existentially dangerous for insurers. Reinsurance is another piece of the puzzle. Insurance companies themselves buy insurance, known as reinsurance, to cover their own losses during catastrophic events. In Florida, reinsurers have hiked their prices dramatically or reduced their offerings, reflecting the global perception of Florida as a high-risk market. These higher costs are passed directly to homeowners. In effect, global financial markets are signaling what science already knows. Florida is on the front line of climate disaster, and its risks are too great to ignore. For ordinary Floridians, this crisis feels deeply unfair. Many have lived in the state for decades, paying premiums faithfully, only to see their coverage vanish when they need it most. Some are denied new policies outright because their homes are near the coast or in flood zones. Others face deductibles so high that insurance barely helps unless the house is completely destroyed. A hurricane may rip off half a roof, flood the first floor, and destroy belongings, but if the damage doesn't exceed the deductible, families are left to pay out of pocket. Insurance, once a lifeline, has become more like a mirage. This insurance crisis has ripple effects across the state. The real estate market, one of Florida's economic pillars, is under strain. Buyers hesitate to purchase homes they cannot insure, while lenders refuse mortgages without coverage. Retirees who dreamed of Florida sunsets find themselves priced out of insurance or unable to sell their homes. Communities that depend on steady property values fear collapse if insurance remains unavailable. It is not just homeowners who are at risk, but the state's entire economy. The government has responded, but solutions are elusive. Legislators have passed reforms aimed at curbing litigation abuses, reducing fraud, and stabilizing the market. They have poured money into citizens and tried to attract new insurers with incentives. Yet these measures struggle against the underlying reality. Hurricanes will keep coming, stronger and more expensive than before. The market cannot escape the fundamental physics of risk. The deeper question is whether Florida can sustain its current population and growth model in the face of escalating climate threats. Some argue that the answer lies in adaptation. Stronger building codes, elevated homes, better drainage systems, and coastal defenses can reduce damages and make insurance more viable. Florida already has some of the toughest building codes in the country, particularly after Hurricane Andrew. Homes built to modern standards often survive storms far better than older structures. But adaptation has limits. Surge waters that reach entire neighborhoods or winds that shred infrastructure can overwhelm even the best-built homes. At some point, insurance cannot be priced at an affordable level, no matter how strong the codes. Others suggest retreat is inevitable. As sea levels rise and storms intensify, some coastal areas may simply become uninsurable and uninhabitable. Managed retreat, helping communities relocate away from the most vulnerable zones, may be the only sustainable solution. But politically, retreat is explosive. Telling Floridians they must abandon their homes is unthinkable for many. And yet the market is already making that decision quietly, withdrawing coverage and forcing families to face the reality of living without protection. The emotional weight of this crisis is immense. Imagine surviving a hurricane, only to discover you have no insurance payout to rebuild. Imagine watching neighbors leave because they cannot afford premiums, while you cling to your home out of hope or desperation. Imagine the fear of knowing the next storm could wipe you out entirely, financially as well as physically. For many Floridians, this is not a distant hypothetical, it is their daily reality. The insurance collapse in Florida is a warning to the rest of the country. As climate change accelerates, other states may face similar crises. Wildfires in California, floods in Louisiana, and tornadoes in the Midwest are already pushing insurers to reconsider their coverage. Florida is simply the front line, the canary in the coal mine of a global system struggling to adapt to new extremes. If insurance disappears here, it may disappear elsewhere, forcing societies to rethink how we protect people from disasters. The question, then, is not just about premiums and policies. It is about the future of living on the front lines of climate risk. Can Florida remain habitable without affordable insurance? Can communities survive repeated storms without financial safety nets? Or will the state's glittering coasts and booming cities become shells of themselves, hollowed out by the exodus of those who can no longer afford to stay? At Crisis Lens, we believe these are questions everyone should be asking, not just Floridians, but all Americans. Because as storms grow stronger and insurance systems falter, the choices we make today will shape the future of where and how we live. Insurance disappearing in Florida is not just a local crisis. It is a glimpse into a future where climate change reshapes the very foundations of society. The winds are rising, the seas are climbing, and the safety nets are tearing. The time to act, to prepare, and to rethink is now. The unraveling of Florida's homeowners insurance system is not just a financial story. It is a human story, a climate story, and ultimately a question of survival. At its heart lies a paradox. The state most vulnerable to hurricanes is also the one where insurance, the very tool designed to protect people from catastrophic loss, is slipping out of reach. Understanding how this crisis deepened requires a closer look at the forces tearing at the seams. The relentless march of hurricanes, the fragility of financial markets, the weight of litigation, and the mounting pressure of climate change. For decades, Florida has been a magnet for growth. Warm weather, endless coastlines, and relatively affordable living drew retirees, families, and businesses from across the country. Cities like Miami, Tampa, and Orlando boomed. Entire communities sprung up along barrier islands and waterfronts. But growth came with exposure. Every new house on the coastline was another asset at risk, another liability for insurers. Hurricanes were a known danger, but the gamble was that storms would be sporadic enough for insurers to spread losses over years of calm. That gamble is no longer working. Take Hurricane Andrew in 1992. It was a watershed moment, flattening entire neighborhoods in South Florida and triggering $27 billion in damages. Several insurers went bankrupt, and the state had to step in to stabilize the market. Stronger building codes were introduced, insurers adjusted, and for a while the system limped forward. But then came the 2000s, the hyperactive hurricane seasons of 2004 and 2005, followed by Wilma, and more recently Harvey, Irma, Michael, and Ian. Each storm set new records, both in terms of damages and insurance payouts. What was once considered a once-in-a-century event began happening every decade, sometimes every few years. For insurers, the math became impossible. A crucial piece of the puzzle is reinsurance, the insurance that insurance companies buy to cover their own catastrophic losses. Florida insurers rely heavily on this global safety net. But reinsurers facing mounting claims from hurricanes, wildfires, and floods around the world have hiked prices and tightened terms. Reinsurance premiums for Florida carriers have soared, in some cases doubling or tripling within a few years. The added costs flow directly to homeowners, who find themselves staring at insurance bills larger than their mortgage payments. Families earning modest incomes suddenly face premiums of $8,000 or more per year, a figure that makes staying insured unsustainable. Litigation adds another layer of strain. Florida has long struggled with an environment where lawsuits over insurance claims are common. Roof damage in particular became a flashpoint. Contractors, sometimes in collaboration with attorneys, would file inflated claims or push homeowners into disputes that landed in court. Even when claims were legitimate, the legal costs piled up, often exceeding the actual repair costs. Insurers argue that this litigation culture pushed them further into the red, making Florida a uniquely hostile environment for doing business. Critics counter that insurers often underpaid claims, forcing homeowners to sue to get what they were owed. Regardless of where the blame lies, the result was the same: higher costs, shrinking competition, and an exodus of carriers from the state. Citizens Property Insurance, Florida's state-run insurer of last resort, has ballooned in size as private companies pull back. Once designed to be a safety valve for a small percentage of homeowners, it now carries more than 1 million policies, making it the largest insurer in the state. But Citizens itself is vulnerable. If a catastrophic storm hits, something entirely plausible given Florida's geography, its reserves may not be enough. In that case, all Floridians, even those not insured with Citizens, could be hit with special assessments to cover the losses. In effect, the state's entire population is on the hook for the risks of its most vulnerable communities. The consequences ripple into Florida's real estate market. Property values are tightly tied to the availability of affordable insurance. Buyers are reluctant to purchase homes they cannot insure, and lenders typically will not issue mortgages without coverage. This creates a chilling effect. Sellers cannot offload homes, buyers cannot close deals, and the market stagnates. In some coastal communities, home sales collapse entirely, leaving residents trapped, unable to afford insurance, but also unable to leave by selling their property. The dream of Florida living, once marketed as sunshine and affordability, is becoming a nightmare of costs and risks. Climate change looms over every part of this story. The oceans surrounding Florida are warmer than ever, fueling storms with more energy, moisture, and destructive potential. Storm surges are higher, thanks to rising sea levels, meaning even weaker storms can produce catastrophic flooding. Rainfall is more intense, overwhelming drainage systems and inundating neighborhoods far inland. These factors combine to make every hurricane season not just threatening, but terrifying. For insurers, the reality is stark. They're being asked to price policies in a world where the baseline of risk itself is shifting upward each year. For homeowners, the disappearance of insurance feels like betrayal. Many have paid premiums faithfully for decades, only to be dropped by their carriers after filing a single claim. Others receive notices of non-renewal, not because of any damage, but because their homes are deemed too risky by new underwriting standards. Elderly retirees on fixed incomes are forced to choose between paying insurance bills or cutting back on essentials like food and medicine. Some families simply give up, living without insurance and hoping for the best. This is not resilience, it is desperation. The political response has been fierce but limited. State lawmakers have passed reforms aimed at reducing frivolous lawsuits, cracking down on fraudulent contractors, and stabilizing citizens. Governors have promised relief and criticized insurers for abandoning Floridians. Yet these measures are bandages on a deeper wound. The underlying issue remains. Florida is too exposed, too storm-prone, and too vulnerable to sustain an insurance market that looks anything like the rest of the country. Unless the frequency and severity of storms miraculously decline, insurers will continue to retreat, and premiums will continue to climb. Some propose technological and policy innovations as potential solutions. Parametric insurance, which pays out automatically when a storm meets certain thresholds, could provide quicker relief with fewer disputes. Government-backed reinsurance programs could help lower costs for carriers, making the market more stable. Expanded investment in resilient infrastructure, like seawalls, floodgates, and elevated roads, could reduce damages, giving insurers more confidence to stay. Yet even these ideas face challenges. Parametric policies may not cover actual losses, leaving gaps. Government subsidies require political will and taxpayer funding. And infrastructure projects, while helpful, cannot stop the strongest storms from wreaking havoc. The alternative path, though politically taboo, is retreat. Managed retreat would mean systematically moving people away from the most vulnerable coastal zones, using buyouts and incentives to encourage relocation. In theory, this would reduce the exposure that makes insurance unsustainable. In practice, it is a deeply painful process. Entire communities would need to uproot. Generations of family history, cultural identity, and economic activity tied to coastal living would be disrupted. Few politicians are willing to endorse retreat openly, fearing backlash. Yet the market may impose it regardless. If homes cannot be insured and cannot be sold, abandonment may occur organically, one family at a time. The emotional cost of this crisis is immeasurable. After Hurricane Ian in 2022, countless families found themselves homeless or facing repairs they could not afford. For many, the shock was not just the storm's destruction, but the discovery that their insurance coverage was insufficient or non-existent. Stories of residents sleeping in cars, of neighborhoods gutted by both wind and bureaucracy, reveal the human toll of an unraveling system. Insurance was supposed to be the promise of recovery. In Florida, it is becoming the symbol of abandonment. The rest of the nation should pay attention. California has seen insurers retreat from wildfire zones. Louisiana has faced similar withdrawals after repeated flooding. As climate change accelerates, more states may find themselves on the same trajectory as Florida. The disappearance of insurance is not just a Florida story. It is a preview of a new era where the private sector cannot bear the costs of climate disasters, and governments and citizens are forced to pick up the pieces. Florida, once the land of endless growth, sunshine, and retirement dreams, is now the front line of a crisis that combines nature, finance, and policy. Hurricanes will keep coming, stronger than before. Insurers will keep recalculating their risks, and families will keep asking the same agonizing question: what happens when the storm comes and no one is there to help you rebuild? The answer, increasingly, is bleak. Without systemic change, whether through government intervention, radical adaptation, or retreat, Florida's insurance crisis will deepen, and the state itself may face a future where living on its coasts is no longer viable for ordinary people. The disappearance of insurance in Florida is not a story about numbers on a spreadsheet. It is a story about people, homes, and futures. It is about a state caught between paradise and peril, between growth and collapse. It is about the limits of resilience and the cost of denial. And it is about a nation that must decide how to protect its citizens in an age when nature itself seems determined to test the very foundations of society. For generations, insurance has been the quiet foundation of the American dream. You buy a home, you protect it with coverage, and you live with the reassurance that if disaster strikes, help will come. But in Florida, that promise is unraveling. The state's homeowners insurance system, once the buffer between families and ruin, is collapsing under the combined weight of climate change, economic strain, and structural flaws. As hurricanes grow stronger and more frequent, Floridians face a future in which the very idea of security is evaporating. The question is no longer simply how to survive the storm, but how to survive the aftermath when insurance, the financial safety net itself, has vanished. Florida's crisis is more than statistics on premiums and payouts. It is lived reality for millions of residents. Families open letters from their insurers and find notices of non-renewal. Seniors on fixed incomes watch premiums climb beyond what their budgets can bear. Young couples eager to buy their first home are blocked because lenders refuse mortgages without insurance. Behind each policy cancelled and each bill unpaid lies a story of fear, frustration, and sometimes despair. What good is paradise if you cannot afford to protect the roof over your head? The collapse did not happen overnight. It built slowly, like the pressure in a storm system gathering strength offshore. Decades of population growth put millions more homes in harm's way. Each new hurricane season brought with it storms that grew stronger, slower, and wetter, inflicting billions in damages. At the same time, Florida developed a reputation for rampant insurance litigation, with lawyers and contractors exploiting loopholes that drove costs even higher. Insurers, squeezed from every side, began to flee. Those who stayed passed costs along to consumers until premiums ballooned into unaffordable territory. At the core of the crisis lies an undeniable truth. Florida is the most hurricane-exposed state in the country, and climate change is making that exposure more dangerous every year. Warm ocean waters in the Atlantic and Gulf of Mexico provide endless fuel for storms. Rising seas magnify storm surge, pushing water farther inland. Rainfall events that once seemed extraordinary are becoming ordinary. For insurers, the problem is not whether a storm will hit, but when and how catastrophic the losses will be. No actuarial model can make this reality palatable. Risk has simply outpaced the ability of private markets to manage it. Citizens Property Insurance, the state-run insurer of last resort, now serves more than 1 million policies. This program was never meant to carry so much of the market, but it has become the last refuge for families unable to find private coverage. Yet Citizens itself is precarious. A single mega storm could drain its reserves, triggering assessments that would be spread across every policyholder in the state. In other words, even Floridians not insured with Citizens could find themselves paying for its shortfall. It is a fragile system propped up by hope and political necessity, not by long-term sustainability. The economic ripple effects are profound. Real estate, the engine of Florida's growth, is sputtering under the weight of the insurance crisis. Buyers balk at homes they cannot insure. Sellers watch values decline. Developers hesitate to build in zones where coverage is scarce. Banks pull back, unwilling to issue loans without proof of insurance. Entire communities teeter on the edge, caught between the lure of coastal living and the hard arithmetic of risk. The dream of a Florida home, once marketed as attainable paradise, is colliding with the reality that paradise comes with a premium many can no longer afford. For families, the choices are wrenching. Some pay the soaring premiums, cutting back on other essentials. Others roll the dice, living without insurance and hoping to avoid disaster. Still others decide to leave the state entirely, selling while they can and fleeing to safer, more affordable regions. Each option carries consequences. Paying the premiums can drain savings. Living uninsured invites financial ruin. Leaving means abandoning roots, friends, and memories. No choice is easy, and none offers perfect safety. The political conversation is heated. State leaders pledge reforms, promising to rein in lawsuits, stabilize citizens, and attract new insurers. But even the most well-intentioned reforms cannot change the climate reality. Hurricanes are growing stronger. The seas are rising. The risks are escalating faster than policies can adapt. Without federal intervention or entirely new models of coverage, Florida's insurance crisis may be less a temporary disruption than a permanent transformation. Globally, the implications are sobering. Florida is not alone. California has seen insurers withdraw from wildfire-prone regions. Louisiana grapples with flooding. Across the world, from Bangladesh to the Philippines, insurers are reassessing their exposure to climate-driven disasters. The disappearance of insurance is not just a Florida story. It is a warning of what happens when natural risks exceed the limits of financial systems. Florida may simply be the first domino to fall in a chain that stretches across the globe. What does this mean for ordinary people? It means the ground is shifting beneath them, literally and figuratively. A home is no longer just a financial asset, it is a gamble. Insurance, once the stabilizer of that gamble, is being pulled away. The psychological toll is immense. Families no longer wonder if a storm will come, but whether their lives will survive the financial aftermath. Fear creeps into every decision, from where to live to how to plan for retirement. Anxiety lingers year-round, not just during hurricane season. Solutions exist, but they are neither simple nor painless. Some argue for stronger government involvement, federal backstops, subsidies, or public insurance programs that spread risk nationwide. Others advocate for stricter building codes, elevating homes and investing in resilient infrastructure. Still others point to managed retreat, the relocation of communities away from the most vulnerable areas. Each solution carries costs, trade-offs, and political battles. Yet doing nothing is not an option. Inaction guarantees a future where insurance continues to vanish, and with it, the viability of life along Florida's coasts. There is also room for innovation. Parametric insurance, which pays out when storms meet certain criteria, could simplify claims and reduce litigation. Risk pooling across multiple states could spread exposure more evenly. New technologies, from flood-resistant materials to AI-driven risk modeling, could help insurers and homeowners alike. But these solutions require investment, cooperation, and public trust. They require recognizing that the crisis is not temporary but structural, demanding bold action rather than patchwork fixes. The cultural stakes are equally high. Florida is more than geography, it is identity. Cuban cafes in Miami, shrimp boats in the Panhandle, theme parks in Orlando, retirees on golf courses, and kids playing on beaches. Each cancelled policy, each abandoned home, each family forced to leave chips away at that identity. The insurance crisis is not just about numbers, it is about what kind of Florida will exist for future generations. Will it be a place where families can live with security, or a place where storms and premiums drive people away? And so the central question looms. What happens when hurricanes are inevitable, but insurance is not? The answer will define Florida's future. It will shape whether communities thrive, adapt, or collapse. It will determine whether the state remains a beacon of sunshine and opportunity, or whether it becomes a cautionary tale of climate denial and economic fragility. At Crisis Lens, we believe the world cannot afford to look away. Florida's insurance crisis is not a local inconvenience. It is a glimpse of the future. It shows us what happens when nature outpaces policy, when risk overwhelms finance, and when denial collides with reality. The choices Florida makes now, whether to reform, retreat, or reimagine, will reverberate far beyond its borders. They will serve as lessons, warnings, and perhaps even opportunities for the rest of us. If this story made you pause, ask yourself, what would you do if your insurance disappeared tomorrow? Would you rebuild, retreat, or resist? These are the questions shaping not just Florida, but all of us in a warming world. That's why we invite you to stay with us at Crisis Lens. Subscribe to our channel to follow this unfolding crisis and others like it, as we shine light on the intersections of climate, society, and survival. Like this video, share it with friends and family, and join the conversation about what resilience really means in the 21st century. Because the storms are not waiting, the premiums are not falling, and the time to confront these questions is now.